Nice to be here. My name is Karok Ray. I'm a professor here at the Mays Business School and also in computer science. I'm happy to talk to you today about a topic near and dear to my heart, which is why Bitcoin has value. It's a question that I get all the time from my other colleagues from the financial industry. Obviously, many of you have heard about Bitcoin. I'm going to tell you and make the case in 10 minutes why this asset is interesting and worth caring about and understanding. So just some background, I'm a professor at Texas A&M. I launched the 2021 Bitcoin conference several years ago. I teach in computer science as well as in the business school, 2 classes on Bitcoin. We have many of our students who take this class. You may not know, but Bitcoin is big business in Texas. More than 25% of all Bitcoins are actually mined in the state of Texas, thanks to our free market for energy, God bless us, and as well as the price of power and the scale and all the infrastructure that Texas has available. So most of you have heard about Bitcoin from maybe a teenage cousin or nephew or friend who is maybe mining this in their basement, or they used to be, or trading it for fun. But let me tell you that Bitcoin actually has a long and very important scientific history. There's 40 years of science and research that went into the creation of Bitcoin. It is the fusion of several technologies and disciplines together: cryptography, economics, distributed computing, game theory, you name it. Bitcoin took all of these together and combined it all at once in a new way, and it really does have strong academic and intellectual foundations. I teach my class on the Bitcoin protocol. We build Bitcoin from scratch over 15 weeks. By the end of the class, students are able to send a Bitcoin transaction on the real network by themselves. And it does take 15 weeks to fully understand how to actually do this. Fundamentally, Bitcoin is a new form of accounting, actually, a new form of representing transactions. It is a way to distribute and transfer value in a permissionless way that is secure. So we've had different forms of accounting over the last generations. What makes Bitcoin truly unique is being able to do this in a decentralized way. There is no central actor in Bitcoin. There's no central authority. Everybody is on the same terms, enters the market at the same terms. And there's a lot of science that goes into why and how that needs to happen. Let me get into some of the just a touch of the basics. So the blockchain, which is a technology that was invented by Bitcoin, by Satoshi Nakamoto, the creator, it literally is a chain of blocks. Okay, these blocks are represented not in the cloud, they're actually on your hard drive that everyone has copies of. And inside each of these blocks, you will see transactions. And these transactions tell you that Alice sends some Bitcoin to Bob, Bob sends some to Carol. That's each of these little transactions inside of the blockchain. So how do you know which block goes onto the blockchain in a fully distributed way? That is the main challenge. Remember, there's no central authority. There's no central bank. There's no single office somewhere. There's no company that's saying that the blockchain has to look like this. So everybody has to agree on what that ledger of transactions look like. The way this happens is that every miner, miners are these computers all over the world they're doing a computation on each block. So transactions, they spread throughout the network. Miners assemble these transactions into blocks, and then every miner has their own block that they start hashing, which means that they're doing a computation on the block. And what happens every 10 minutes is that there's literally a lottery where the Bitcoin protocol announces a winner, and that miner wins the Bitcoin for that block, and their block goes onto the blockchain. In computer science, we call this the leader election problem. It is a way to have multiple parties agree on what the one true chain of transactions are. So the mining lottery, which is the largest lottery in the world, it pays out 3.125 Bitcoin every 10 minutes, so around 400K or so every 10 minutes. The structure and design of this is probably one of Bitcoin's leading innovations, though not the only one. The Bitcoin protocol automatically automatically adjusts the difficulty of mining so that it maintains this 10-minute block time forever, really, since it's been like that for the last 14 years, and it'll be like that forever. There's a lot of interesting reasons why that happens. But the lottery is the primary way that new Bitcoins are circulated into society. That's where they come from. So let me show you what the issuance of the block subsidy is. So like I said, every 10 minutes, a miner wins a block. They receive new Bitcoin that did not exist before. That schedule is set in software. It's set by the protocol, which every full node agrees to. And that software tells you that the initial subsidy, the initial award for the lottery was high, and then it's been going down every 4 years for the next 100 or 40 or so years. And so it'll keep going down until there are no more Bitcoins that are released into circulation. So the issuance of new Bitcoin tapers down. It tapers down, it starts at 0, and then ultimately 21 million Bitcoin will be issued, and that's it. You've probably heard about that there are only 21 million Bitcoin. I'm sure you've heard that phrase. That refers to these block subsidies, these rewards that are issued to the miners. Most of, I think, Bitcoin's value comes from this actual feature. Of all the things you've heard about, I believe this is the most important feature. It's not even clear to me that the creators of Bitcoin even realize fully how valuable and important this particular piece of the software is, that the schedule of new Bitcoins will taper down over time. And so I'm going to explore a little bit about what that means and why that is important. So let me compare this to gold. Okay, so remember we call this the supply cap. The supply is fixed. It's fixed at 21 million. And in the short term, it's really fixed. It doesn't change because you can't add new Bitcoins outside of the schedule. So if we compare this to gold, and imagine that we have, for example, some basic economics. We have a supply curve for gold, and we have a demand curve for gold. And so imagine that we have an increase in the demand for gold. Let's say, like has happened in the last year. People are worried about devaluation of the dollar, so they start buying more gold. What happens to the price of gold? Well, the price of gold rises because of the increase in the demand. Once that price rises, the whole gold market knows that now gold sells for a higher price in a competitive market, and so new gold miners will now come online. And so the supply for gold increases, and now the price for gold actually decreases from the original high. And so what you see is that essentially the price of gold, because of the supply shift, is moderated in the gold market. In Bitcoin, actually, that does not happen. Okay? In Bitcoin, because supply is fixed, when demand is high, the price rises. Supply cannot adjust. When demand is low, supply shrinks. So now what happens is the supply curve is fixed and demand is more extreme than before. And for this reason, Bitcoin is volatile. Okay, so you can see this in this curve. This is the S&P weekly return against Bitcoin. You'll see it's a lot more volatile than Bitcoin is a lot more volatile than the S&P. So that's the downside, I think, of the supply curve. But there's also a significant upside. And the upside comes from the social demand for a scarce asset. Let's suppose that, just as a kind of a thought experiment, let's suppose you wanted to say, what would your return from Bitcoin be if you bought it at the highest possible price and you sold it at the lowest possible price for any fixed holding period? Okay, I'm going to call that the worst return from holding Bitcoin. You're really making the worst possible trade. And I'm going to look at how that looks for all possible holding periods. So that graph looks like this. Okay, so when you start out for short holding periods, it's very volatile. You can make some big mistakes. But the longer you hold the coin, the higher that worst return is. And this is average annualized return. Okay? So just to give you a perspective of how profound this picture is, let's compare this to major asset classes. Okay? Bitcoin against gold, real estate, and bonds. You know, this is a species of asset which is on a kind of from another planet almost. Okay, and even if you compare it to tech stocks, for example, which are more volatile and have higher, the best tech stocks have higher long-term returns. Still, Bitcoin over a 11 plus year horizon leaves everyone else in the dust. Now, let's say you looked at the best possible returns of these other companies. These other assets. Same thing. I mean, the best returns in the other assets would be good in the first few years, not so much in the long term. Okay. This is what we call the power law of Bitcoin. If you take a regression of the log price of Bitcoin against log time, do a log transformation, you'll see that Bitcoin so far has followed a linear progression in the logarithmic space. Okay, so there's a lot of interesting research behind why this happens. So ultimately, I believe that all of this is happening because of the demand for a scarce asset. Bitcoin is a provably scarce asset in a way that nothing else is. We can computationally verify how much Bitcoin has been released and will be released. I believe there is, as the market for gold and Bitcoin have already showed, continuing demand for a scarce asset, and it's something that I think the world needs to take seriously. Now, Bitcoin is not just about money. To me, it's bigger than that. Bitcoin is trying to rebuild the financial system on a more sound foundation. I saw this firsthand when I was in the Bush White House from 2007 to 2008 during the financial crisis. I was on the Council of Economic Advisors. I was the financial economist. It was not my fault. I can tell you we spent that entire year trying to repair the financial system that has been developed slowly, organically, and ultimately is quite literally broken over time. Bitcoin is trying to do something completely different and to remove the central actors and the intermediaries, and I think we do need a new system. What keeps me excited about Bitcoin are the students at Texas A&M and elsewhere who are excited about this new financial future. I'm happy to talk to anybody anytime about Bitcoin. You can find me on Twitter, email me directly, or check out my website. Thank you.